Welcome to the Ag Commodity Corner Plus podcast. My name is Mo Agostino, Chief Commodity Strategist with Farms.com Risk Management. And it's week number 55, April 24th, 2027, Friday afternoon. Thanks for joining us. And today we're talking about that hard red winter wheat crop. 70% of it's in a drought with very little moisture for the next 5 days and frost again. Unbelievable. Doesn't look like an early ideal planting season for some. Let's get right into it. Here's the weekly summary chart. Unfortunately, my right-hand man, Abhinesh, is off today, so I'm on my own. He'll be back next week. You can see here that soy oil continued to surge. Weekly new contract highs up to 71.33. As this Iran war rages on, the whole biofuel alternative energy continues to gain some traction there around the world. Canola up 30.2. We'll get into why canola rallied as high as it did after testing support at 700. Resistance comes in at 750. Kansas City wheat up another 20 cents. That's a new closing contract high. We're actually breaking out technically above that 660 ceiling. And Minneapolis wheat has surprised everybody. It was the laggard before we actually rallied in wheat. And all of a sudden now it's also up 23 new contract closing highs. And we'll get into some reasons why that's happening. We've got the we got the S&P 500 and the NASDAQ at new all-time highs. I'll talk about why that's happening. And then we've got crude up 11.55. That shouldn't say new contract lows. I don't know where that. That should be under natural gas. So I apologize there, folks. But we were calling for new contract lows in natural gas. Now 252 US. So let's get right into it. So this is the U.S. Ag in a drought. This was the latest NOAA forecast as of Thursday, April 20. Well, it was April 21st, so Wednesday, I guess. You can see cotton, 98% in a drought, peanuts, 100% in a drought, and winter wheat at 70%. That's up 2% from last week versus 33% for last year. It matches the 2022 drought in wheat. And I think next week we could actually trade to new all-time highs. And I think the crop progress report's going to show wheat further deteriorating in terms of crop conditions. The spring has been record dry and hot, and the month of March is one of the driest since the Dust Bowl. Third driest since July, August of 1934. And you can see here that some of the crop conditions, the top 5 hard red winter wheat U.S. states rank 47% crop conditions, poor to very poor, 15% only in good to excellent. And I think with no rain, hot weather, it looks like those conditions will continue to drop, and that's one reason why Kansas City broke out. I think it was because of that 70% HRW in a drought. You can see the soil moisture deficit in the two main regions, the south-southeast, actually traveling into the Midwest, but there's this corridor here between eastern Texas all the way up to the Great Lakes that's been getting a lot of rain. And then, of course, the Western Corn Belt remains quite dry. This is a really cool map because the dark browns suggest that you would need as much as 30 inches of moisture to fix that drought. In the southeast, it's about 20 to 25. You go further north and the lighter brown shaded areas. You're looking at maybe 15 inches. And so the weather does not look ideal, as I said earlier. This is as of April next Tuesday, and you can see the cold weather that's just going to dive back into that U.S. plains. I don't think that's gonna that doesn't help anybody. There is I'll get to it in a second, but I think the funds will on Monday. If they take away that moisture for hard red winter wheat for Friday, Saturday of next week, I think you trade to $7 on Kansas City. This is through May 1st, Friday. Look at the cold weather. It does not bode well. I guess it's plant early, plant often. This is your frost risk through that period into the end of next week. And then this is all the way out to May 23rd. Where's the warm weather? And look how dry the western plains are. This is that moisture that they're calling for that to U.S. plains into parts of western Kansas, Colorado, Oklahoma, maybe some in Nebraska out to Thursday of next week. But if it doesn't verify like the other forecasts, I think we trade another leg higher. We have to ration demand with higher futures. And this is the long-term forecast from the GFS American model. And this is for the month of May. It's wet in the Midwest and maybe Southeast, but it's kind of missing it. But it remains almost dry in the Western Corn Belt. The European model has been more consistent, and it looks like it's really dry in the Western Corn Belt, but wet in the Midwest, Central, maybe some relief in the Southeast. So this is July Kansas City wheat. You can see that we're breaking out to new contract highs. The next price count could be as high as $7.50. Could this be a 2022 spring-like rally in wheat? In 22, wheat rallied 57%, $5 per bushel. I'm not sure we can get that high, but it peaked around May 16th. So some food for thought as we end the week. Don't forget to try our program. This week we were talking about top 10 reasons to remain bullish corn and soybean futures over the next 30 to 60 days. We've been the only bullish commodity analysts since August of last year, and we've kept our clients in the game, and we've made some really good money. We were one of the very few that were projecting Kansas City wheat futures to $7. So we're almost there. Actually, this morning, I think we traded as high as $6.86. If you sign up, I'll send you those reports. Send me an email, risk@farms.com, or just click on that QR code. The next 2 weeks, both the GFS and the European models are looking dry for that central Brazil. This could catch some headlines and maybe push corn futures higher, but we're going into month end next week, so we'll see whether that offsets it. And then we've got this is soybeans. So earlier in the week, there were some rumors that China was looking to buy some old crop U.S. soybeans from the P&W. So at one point, we tested the ceiling at $12, but we weren't able to hold. So it's not a big deal. We're still range bound. We're waiting for that mid-May meeting with Z and Trump, and I believe that could be a game changer. And at some point, we could be $2 higher from where we are today. And Kalshi, I don't know if you guys have heard of Kalshi, but Kalshi is like a Polymarket, FanDuel, DraftKings. They're a betting platform. They're now entering the commodity markets, and you can bet on corn. So this is betting on corn on April 30th. Is it going to be above 456 or below? The answer is basically yes or no. You bet some money and you could win some money. What this is going to lead to is basically 24-hour commodity trading. The CME is probably going to have to match it to maintain market share. And so if at some point we're not going to get a break, we can trade corn futures on on Saturdays and Sundays. Trump extended the U.S.-Iran ceasefire indefinitely. I think the best strategy he's used to date is to blockade those ports of Iran because the economy is collapsing. They're missing out on $500 million a day in oil revenue. And I think it's going to have to force Iran to make a deal. I don't think they can fight it because if they could fight, maybe we wouldn't have that blockade, but it's still there. And then I think for this war to end, you also need Israel and Lebanon to stop fighting because I think Iran will not agree to a ceasefire until they do. So I think all of this could come to an end very soon. We're stuck between 80 to $100 in crude oil. Trump is talking up the stock market. That's why you saw both the S&P and the NASDAQ hit new record highs, but he's also talking down crude. So I'm not in the camp that says we're going to 200, 400, whatever that number is. I think by year end, we'll fix this. And a lot of experts are suggesting to you that, we've done a lot of infrastructure damage. That's going to take years and months to fix. I think it could take months, but not years. There's a lot of revenue at stake, and I think they could find the money to rebuild very, very quickly. So we just need to open up that strait and just end this war. And so if you missed out on booking diesel fuel, let her go, let her slide. If you look at the deferred months, they're down into that $75. And then canola rallied, as I said earlier, because AAFC had to lower ending stocks dramatically by 500,000 metric tons because domestic use is record strong, crush is record strong, margins are through the roof. And exports are improving because we lifted those tariffs from China. So futures have had to rally to ration demand again. And I think at some point with this weather delay, because the Canadian Prairies are just snow Armageddon, they're just getting more snow and more moisture, and it remains cold through at least the first or second week of May. So it's not the end of the world. It's not delayed by a lot, but it's a delayed year in the Canadian Prairies. So I think canola needs to probably trade higher over time. And then finally, HRS, Minneapolis wheat, hard red spring wheat is surprising. This thing was lagging the wheat complex when we were down in this area here. And all of a sudden, the market has turned bullish. And you can see new contract highs. And for this contract, the high is around that 701. So I think into next week, we could break out into new contract highs for this contract again, because it's been too dry. And now they're going to get some cold weather again and some more frost into next week. And then finally, with the CFTC report, we did see some fund buying this week. And last week in the podcast, I said in real time, the funds could be long in the grain and oilseed plus canola as long as 800,000. And we're at 800,000 and 3,212. So still below the record at 886, still below this high at 875,000. But they're defending that long position. They're buying the dips. And I think we go. I think they'll continue to buy, particularly as we get closer to that mid-May meeting with Trump and Z. And then I'm a little concerned about hard red winter wheat managed money. You can see the high here way back in 2018 at 70,000 plus contracts. We're long 57,000. So we may run out of room unless they want to go even longer. And I think they can. They have more money at their disposal. So I think the funds will have to go to record long positions in HRW to maybe take it as high as I think we can go in futures. But remember with the HRW, it's a problem. It's a regional problem, but SRW could offset. Global wheat stocks are pretty large, and ending stocks in the U.S. are very large. So at some point, this may come to an end. So just understand that. Thanks for watching. Don't forget to subscribe to our channel. And until next time, take care.